Good evening, traders. Let's get right to it. It's Friday evening. We'll take care of all of our recaps. So the first thing I want to take a look at is all the trades that we closed out this week. We closed out our crude strangle up here. We were in it for 3 days. We ended up with $1,100 and some change profit. We closed out we didn't actually close it out. We just let our S&P 500 futures strangle go to max profit, 422.50. And then we let our strangle in the S&P 500 futures in the $1 million account. We let that expire for max profit, 14,925. Hey, we're at equity highs in the $1 million account. I know it's a paper account, but we trade it very conservatively compared to how we trade in our real accounts. Much more conservatively than we do in our real accounts. That paper account, for those of you that may be watching the first time in 22 months, we're up a little over 142% in that thing. This strangle strategy that we're playing just works like you would not believe. We've got very specific rules on how to enter, when to enter, where to hedge, how to hedge, and it's just worked through thick and thin. So we continue to play what's working. And those weekly S&P 500 futures strangles have been working for quite a long time. We're talking through 16% collapse, a 10% sell-off, what was like a flash crash, maybe 5% little corrections. So it just continues to work. What else works is the crude strangles. We continue to play those, at various duration cycles or days to expiration, and the SPXR and condors in our retirement accounts are working too. So we're just creatures of habit and just continue to go back in there. And everybody listening to this is trading along with me. Just stay with all those things that are working. All right, let's move to the next update, and we're going to take a look at our let's take a look here at our weekly levels. Alright, so every Monday morning I get up about 6 o'clock and plot our levels for the week. Let's start up here with the S&P. And we use those levels to place trades against. So I really enjoy plotting the levels, keeping track and record of them for when the markets touch, when they close beyond the levels. All those important stats that we need to keep up as traders. So I trade against those levels every week, week in and week out, and those things work. That's why our $1 million account is up so much. So let's get right to it. S&P 500, you can see our upper level is this horizontal black line. That's the second level to the upside. First level is this black line here. First level to the downside is here. Second level is here. That holds true with all the charts I'm going to show you. Alright, the red horizontal areas are places where we were going to hedge in any of our strangles should we have to take evasive maneuvers. So that's just the point where I know from historical backtesting over decades that I want to hedge my weekly strangles. You do it without questioning it. You hit those levels and you hedge it. We know exactly when we're going to put the strangle on, what prices, what levels, when we're going to take profits, and most importantly, where we're going to hedge these things if we get into a problem. All right, let's check out bonds. Bonds were tame this week. Bonds have been one of the most volatile products that we follow on a weekly level. It continuously, constantly goes through that first level. It holds the second level very, very nicely. So you can see we're in a nice sloping downtrend, and upper level, second level, first level to the upside, never even came close to the lower levels this week. Alright, let's take a look at crude. Crude had a vicious rally this week, last 3 days. So it went right up into the area where we would have hedged. Now, if I'd have been in that crude strangle, that I closed out this week, if I was still in that, I would have put a hedge on right there. It's just, for me, it's a mechanical thing to do. It's what my back testing and research has borne out, that you just hedge it right there and deal with it. Okay, dollar, it has been very, very tame. This thing is just lying dormant, it looks like. But, you know, one of the cycles that's always true is, you know, always works out is a quiet time always is the beginning of a very violent time. So we're looking for that very violent time. All right, so let's see. Here's gold. Gold just kind of dripped down all week long. We hit our first level to the downside and closed down slightly below it. But had we been in any gold strangles, we would have been hands off at this point. We don't sell at these levels right here. We sell above those above and below the red lines. All right, so we've already talked about the $1 million count. No photo here. Everything worked out nicely. So yeah, why did this do that? Okay, TLT. Hey, we're very bullish on. Well, we should say we're very bullish on interest rates. That interest rates are going to go higher over the course of the next 18 months to 3 years. So anytime we started building position in TLT, buying leap options up in these areas right here. So, you know, if we ever get back up into this area, we're going to add to our position. We're just going to buy puts as far out as we can. You know, anywhere, just pick your strike. It really doesn't matter. 132 all the way down to 110. Just go ahead. I think it's going to hit those. That's just my opinion. Once it starts moving to the downside and rates start going up, it's going to hit those with relative ease. But we never know when it's going to happen. So anyway, I think this is just a beautiful spot to buy puts on TLT. Here's a look at the 30-year interest rates. So we drew this highlighted box well before it dipped down here. So it was probably back in this area when I drew this box. I keep extending it to the right as the market moves. But one of the things we were looking at is to, again, anytime we get below this box right here, go ahead and buy some puts in TLT. Because I really think we're looking at the lowest interest rates that we will ever see, that mankind has ever seen. Okay, that's a wrap up for our weekly levels for the week. Let's move to the next product, and let's see, what are we going to look at? Oh yeah, I want to show you I need to show you the weekly levels, the Excel sheet. Need to review that. Alright, so what we're looking at here is, I keep track of this in real time. I also have decades of back testing, but this is just some real time stuff that I started keeping track of a while back. So an X in these columns indicates that the market closed outside of one of our levels, meaning it breached it. So let's move down here to our little graph, and for the S&P, what this tells me is that 91% of the time over the last 12 weeks, S&P has stayed inside that first level. 91.67% of the time, it's also stayed within the second level. We've only had one breach outside of the levels in the S&P. It's just an incredibly quiet time in the S&Ps, hanging around up here at the highs. These markets just won't fall down. Trust me, I'm not begging the stock market to go up by any stretch of the means. I can't believe it's still levitating up here for as long as it has. All right, let's take a look at the bond market. You see, I mentioned earlier that the bonds have been more volatile than any other product we trade or we follow. So bonds have breached that first level 58% of the time. but it stayed inside the second level ever since I've been watching it. So those second levels have held in the bond market. Level number 2. All right, so let's go to crude. You see 66% of the time we're inside that first level. 100% of the time we've stayed in the second level. You know, whenever I get a chance, whenever I put crude strangles on, I'm selling at those levels that we have identified. The dollar's been pretty quiet too. You can see here 83% of the time it stays within the first level, 91% of the time it stays within the second level. And then gold, 75% inside first level and 100% of the time above or in between the second levels to the upside and downside. And then we just want to know how many times it touches a certain level. So touches, not really closed above, but touches. So you can see here the S&P, the dollars never touched the second level. The bonds have never even touched the second level either. That's pretty impressive. And you got gold and the S&Ps touching their second level at least once, or one time. So we'll keep these stats up. These complement our back-tested results, back-testing that we did on these levels going back a lot of years, a lot of hand crunching the data. So everything walking forward in real time matches up what the historical levels that tell us that better than 90% of the time those second levels are holding in the market. Okay, let's move over to let's see here. What do I need? Yeah, let's go here. I need to do let's take a look at the retirement account trade. So we've actually got 2 trades going in here, and the core positions on the retirement account are the iron condor and a broken wing butterfly. So those, the iron condor and broken wing butterfly are the staples, the core products, and they're really 2 separate trades. I have them both included in here, but they're 2 separate trades. This is what the broken wing butterfly looks like. I'll manage them separately. It's easier to do this. And here's what the iron condor looks like right now. So I won't pull up my trade template plate yet. I'll have that ready for you Monday. But we're still in really good shape in the iron condor trade. Love to see some downside action. So I don't know. Maybe we'll get lucky. Maybe the bizarre will happen, and this market will go down and stay down for more than 12 hours or so. Okay, folks, that's a wrap on the updates for the night. So I'm going to go ahead and bid you adieu for the weekend, and I will be back in here Monday morning putting out the levels for the week. We also have, so you probably hear something from me Sunday night, and more than likely I'll be putting on some either Strangles and maybe iron condor trades in the crude market. After the market opens up, we'll take a look at those. So anyway, stay tuned for the new trades Sunday night, the levels on Monday morning, and you guys have a nice weekend.